I'm Dr. Dave Janda. Welcome back to the Insider Insight Show. I am honored to have back with me someone who is a very dear friend and someone who is a very dear friend of every person that values free and fair financial markets. So we automatically exclude anyone who is a globalist. We exclude everyone in the banking syndicate. We exclude, although actually the vast majority, 99% of folks in Washington, D.C. and state capitals around our country and capitals around the world that have either an R or D or you name a political party after them, because they are all owned and operated by a criminal syndicate. And that being what many people call the globalist cult, the globalist syndicate, the New World Order crowd, the criminal international banking syndicate, the deep state, take your pick, the shadow government, it's all the same. Craig Hemke has been on the front line for decades. Sorry, plural. Educating and empowering every person who was willing to listen to truth, facts, and data. And that's what Craig is all about. He tells you what you need to know. It might not be what you want to hear, but you get the unvarnished truth from Craig Hemke. And he went the extra mile. Look, Craig's path is actually pretty similar to mine in that we both could have kept our mouth shut and led comfortable lives and less eventful lives, less stressful lives by doing what we were doing. Craig was a licensed security professional for nearly 20 years, and he became disgruntled with what he describes as the fraud known as financial services, very similar to what Dave decided about the fraud of the medical industrial complex. And he retired to a career as a serial entrepreneur, lucky for all of us. And he founded a phenomenal website with a fantastic community that provides incredibly valuable information on a daily basis, tfmetalsreport.com. I am a proud paid subscriber. I have been since its inception. It's one of the very few things Dave Janda subscribes to. And why do I subscribe to it? Because of the analytical skills that Craig brings on a daily basis with his incredible analysis about what's happening in the financial world, tying it in with the geopolitical situation. The community he's created. He has fantastic input from his community on their message boards. And the bottom line is that information puts you far ahead of the curve. tfmetalsreport.com. It's my honor to welcome back Craig Hemke. Craig, welcome back.
Dr. Dave, it's always nice to see you, my friend. Very, very much appreciate that introduction. I'd add just two things, I suppose. I am in the state I live, a proud, unaffiliated voter. Have been since May of 2008. Registered with neither party. The second part is I'm not sure if there's anything about me that's special. Site members like you and everybody else afford me the luxury, the responsibility of watching all this stuff all day long. It's all I do. Mm-hmm. And so when you pay attention to this, 12 hours a day, 5 days a week, and on the weekend, you start to notice things and connect dots. And I just have the time to do it. I've been blessed with the time to do it. Other people that would be in my shoes would draw a lot of the same conclusions if they had the time to actually notice all of the things going on in the markets, in geopolitics and politics. So my site is a kind of a compilation of all that hard-earned experience and wisdom, and we try to share it with everybody every day.
Well, actually, there's one component, Craig, that you're very modest about, and that's courage. You see, there are a lot of people that might have at least a trace of the analytical abilities you do as it relates to the financial side of the equation, but they don't have the courage. Because the blowback I get for telling people the truth that they might not want to hear is significant. For example, when you started your site in 2010, it was same time I started the Operation Freedom radio show platform, 2010. You spoke about the end of the great Keynesian experiment, essentially the financial system coming down. All right. Let's fast forward 14 years. Now, when Craig was saying this, you're a conspiracy theorist. you were, whoa, this guy talking about precious metals? They're barbaric, they're relics. They're rocks. Come on. Yeah, I mean, come on. So, a couple days ago, globalist, one of the prime guests on CNBS, Fox Business News, Mohammed El-Erian, bankster essentially extraordinaire, or a friend of the banksters extraordinaire, said the following. And again, 14 years. Here we go. Record high gold price signals the, quote, fragmenting global system, end quote. Craig, this was your opening salvo 14 years ago.
I suppose it is. Yeah, Mohammed El-Erian, for a long time, worked with Bill Gross at PIMCO. Mm-hmm. And Bill Gross, known as kind of the bond king. So you think if anybody's wired into the Treasury Department and the Federal Reserve, it's people like Gross and El-Erian. So for him to have anything to even mention gold is significant, I suppose. There's a lot of layers. You could read a lot into that statement about fragmenting system as it relates to the debt-based system that we are, currently maintaining. That's what the end of the great Keynesian experiment is about. And that's just simply about math. I mean, you get this point where even servicing the existing debt is such a challenge financially. There's really no way you can do it without just simply creating more debt, which is creating more currency, which is creating more dollars. And the thing just begins to spiral exponentially. Now, even traditional economists look at that and go, well, but as a percentage of GDP, yeah. Well, okay. We just ran a $1.83 trillion fiscal deficit for fiscal year 2024, which in the U.S., the fiscal years run October 1st to September 30th. So we just wrapped up the most recent fiscal year. 1.833 trillion. 1.1 trillion of that debt was used servicing the existing debt. Okay, so as the debt grows, that debt service cost grows, and as a percentage of GDP, we're doing this level of debt in what is supposedly a robust and strong economy. You're reassured that by the government bureaucrats in every data set as we head up to the election. So what happens when we do get the next recession, which I would say has probably already begun? You just won't be able to notice it until you have the benefit of some hindsight. And government tax receipts fall. Government tax revenues, everything from tolls to personal income tax. That's the only money that governments can bring in. And when that begins to fall and the spending continues to increase, well, now all of a sudden your debt to GDP ratio is, moving into the 150, 180% category. And again, that's just this spiral. And so I've been able to hang in there through all the lean years. We wandered in the desert for about 36 months there, or 48 maybe, from 2013 through 2016. And I was able to, people are like, how do you keep your faith? How were you able to stay in there? How are you able to hang in there? Why were you, continuing to buy metal through all that period? Is because, well, the math is the math, man. It just is what it is. I mean, there's no magic wand. And you'll notice, Dave, I'm sure people listening to us have noticed, neither the red team nor the blue team dare touch this subject.
Nope.
In the election.
Nope.
Because they know they're both responsible for it. And they have no solution because, again, the math is the math. So nobody wants to talk about it. Well, we talk about it. You and I, we talk about it at my site. And all we can do is prepare for it, prepare for what's coming. And that's kind of what El-Erian's talking about.
And Craig, from the very onset of your platform, you spoke about how the numbers didn't add up to a sustainable system. It being so laden with debt, which has only escalated.
Right.
You got a lot of heat for that analysis. You also got a lot of heat for saying, look, if you look back historically, in when a debt-based system crashes, implodes, the two entities that kind of have historically held their own as far as a store of value have been physical gold and physical silver.
Yeah, right.
Now, Craig, off the top of your head, When you founded the site in 2010, what was gold and silver going for?
Well, silver in 2010 was around $18 to $20 an ounce. It then, once we got into 2011, is when it went from 18 to 48, and then back to 26. And most people know, it's been 12 years since we've been at these price levels. Gold, on the other hand, moved up from 1,200 to 1,400 to 1,600 to 1,900, then went back down to 1,100 by 2015. Even as recently as, well, heck, Dave, about this time last year, it was around 1,850 or 1,900. So it's moved up substantially, almost 50% in just the last 12 months. And there's a number of contributing factors to that. And I don't want to just hang it all on one, but I will give you one that has driven things as of late. Every month on what's supposed to be the 8th business day of the month, the U.S. Department of Treasury puts out their monthly, they call it the monthly Treasury statement.
Until this past month, right?
Well, not this past month, yeah. But they're supposed to do this on the 8th day of every month. So back on, or not the 8th day, but the 8th business day. So back on, I don't know what it was, September the 10th or 11th or whatever it was. Here comes the summary for August. And they put it out in the afternoon. So, not a whole lot of people did it, but enough did. In August alone, Dave, just the 31 days of August, the U.S. ran a deficit of $380 billion. Again, not for the year. I remember back when I was in college, it was $250 billion for a year, and everybody's like, "Oh my God, this Reagan guy."
Right.
Which, again, that's a whole other story. But $380 billion for a month. Yeah. And I think was enough to pick up any responsible fiduciary, whether it's your stockbroker or a hedge fund manager or a mutual fund manager, and just kind of shake them by the lapels and go, "Don't you see this? $380 billion in a month." And that's this latest surge of gold from about 2450 to 2750 has come after that. And so it's this growing realization now that this end game is approaching. I don't know what it's going to take, Dave. $50 trillion, $3 trillion a year to service the debt. I don't know. But I know the momentum now is headed in that direction. And in a pricing scheme where the price for these metals is discovered through kind of a fractional reserve, derivative-based trading system that implies there's far more metal than there really is. When you get down to brass tacks and people now once again demand the physical metal, I don't even know where the price is going. People think it's gotten expensive. Hey, you ain't seen nothing yet.
And add some fuel to the fire, maybe even gasoline to the fire, was something you identified in, I believe, March of 2022, when the United States confiscated $300 billion worth of Russian assets. And essentially that let not just Russia got their attention, but it got the attention of the world. Say, wait a minute. If the West is throwing people out of the SWIFT, the payment system, the dollar-based payment system, and if they're confiscating their assets because they don't agree with what they're doing, at the time that being Ukraine, what does that mean for us? Because, gosh, our little country, well, we don't have nukes, but those guys got nukes and they're doing this to them. What are they going to do to us? That also caused, if you will, and tell me if I'm off on this, a run on the dollar, hastened the collapse, I believe, and again, you're the expert, but hastened the collapse of this system. And what also made gold and silver more valuable as far as them being a bedrock of financial stability. Am I off on that?
Yes. Again, the old salesman type thing, the car salesman. Don't confuse value with price, right? So when you say valuable, that's an important term. Don't be just thinking price. Right. There's value in having these assets, okay? And that's, I think, what you're getting at, Dave. And you're correct. I covered and studied the crisis in Ukraine from when it began back the Maidan coup, which is really what it was in 2014.
2014, yeah.
And you could see this coming, and there were off-ramps for 8 years to try to, mitigate this so that hundreds of thousands of Ukrainians and then Russian soldiers wouldn't have to die. Now, we could argue, again, there are logical people argue, say, terrible war should never have happened and we got to do something to stop it. Whatever, fine. Whatever. What I'm concerned with, and a concern for people on my side and anybody that owns precious metals, is the message that was sent when that war began was they looked at Russia, the US and the EU and the G7 and said, we're going to do two things. You've got $300 billion worth of assets that you hold outside of Russia, your foreign currency reserves. We're going to seize those. Yeah. And now there's even talk about, actually straight out taking them.
Yes.
We're going to sell those $300 billion. We're going to steal that from you. We're going to use that money to arm Ukraine. All right. And then second, we're going to freeze you out of the international payment system called SWIFT. So the message then was, not only are you doing this to Russia, this is a message any forward-thinking foreign leader would go, oh, wait, time out here. Whoa, wait a second. Eventually, we're probably going to do something that we deem in our self-interest, but the U.S. isn't going to like, and they're going to do this to us. So now behind the scenes, it's been going on for 15 years, but it has sped up over the last 2 years. These collection of countries that they're not all adversarial to the U.S., but there are going to be times when their interests don't align with ours, and they're getting together now to work on forming a new system, an alternative system that they can use to continue to conduct business if and when the U.S. and Europe tries to cut them off for whatever transgression. Now, the way to think of this is it's not the U.S. dollar is all this and then all of a sudden it's not and it goes away. That's not how it works. Just think of it as competition for the dollar. Okay, right now the dollar is the reserve currency of the world. That provides demand for dollars as countries trade amongst each other, and then they take the dollars and they buy treasuries, and that's how the system has worked for 80 years. But as demand for dollars goes down because of alternatives like this, that are being developed, at the same time as supply for dollars is increasing with all of these debt service costs that we were talking about a few minutes ago, then it just becomes Econ 101 that most folks might have taken in high school or college. If you have any good, you have more supply and decreased demand, the price of said good falls. And that's what's happening to the dollar, and that's what will continue to accelerate. And that has dramatic impacts, not only on precious metals, just to everybody's daily life, cost of living, the standard of living here in the U.S. These are really important issues that people need to be on top of.
And that group of countries you're referring to are the BRICS group: Brazil, Russia, India, China, South Africa, but add Saudi Arabia. And now they announced some other new members just yesterday, including Iran and Turkey. And supposedly they have another 80 countries that, in addition, want to join this, if you will, as an alternative to hedge their financial bets, if you will, in case they get cut off.
Right.
So, Craig, this meeting is occurring in Russia right now. And everybody's focused on, and there have been some communiques put out that they're working on a multi-currency system for cross-border trades. So there's somebody I know that has access into that meeting. And one of the things this person told me last night was that, everybody's focusing on this. Oh, are they going to come out with their own currency? Are they going to do this? Are they going to do that? You go, Dave, here's what everybody seems to be missing. They actually are focusing on establishing trading hubs, commodity exchanges for oil, natural gas, grains, precious metals, including gold and silver, platinum, palladium. And people don't understand the significance of that. Well, Craig, as Dave looks at the significance of it, it means that this vice grip of commodity exchanges that have been based, for the most part, whether it's London or New York or Chicago, have really been based on paper vapor assets and manipulation. And if you're going to have a new commodity exchange, and we've seen this, if you will, in Shanghai, that's physically based, that is not based on paper vapor manipulation, Craig, you don't have to declare you have a new currency, because you've now imploded the very means that they're using to prop up the dollar and prop up the economies of the world that they want to prop up with their criminal manipulation of markets. Is that a bad assessment of mine?
It's not a bad assessment. I might, in the end, take that as more of a sign of the infrastructure being built, because the current pricing structure scheme that you reference in London and New York is all dollar based, and it's not physical trading based either. It's mainly just trading of forward contracts and future contracts and derivatives and things like that, with very little actual physical metal trade exchanging hands. And so if you're going to set up a new system where your unit of trade, you can call it a currency, but maybe it's just something that, it's like the International Monetary Fund has this thing called a special drawing right.
SDRs.
A lot of people use that SDR, special drawing right. And what that is it's a kind of a basket. It's a unit. It's a basket of all the major fiat currencies. What they're probably going to establish is something like that, where there's this again, just something with a value of 1, and it's made up of Chinese yuan and Russian rubles, and you go down the list, but it also has some gold in there as well, a weighting of gold. And then that unit, because it's diverse amongst all these currencies and has some gold, becomes something that's preferable to use. If you're going to have that, then you also want some control over the pricing of that gold, because it has to be able to reflect the real value of it. And that's not what's discovered through the current pricing scheme of New York and London. So I look at that as not the big, as you've described it, not the a big bellwether thing, as just another maybe step in the process that we're headed that way. And again, why would these countries do that? Again, if you are, pick any two countries of the BRICS, even Russia and China. Okay, Russia wants to sell some coal to China, and China, okay, so fine, but maybe China doesn't want to take Russian rubles in exchange, or Russia doesn't want to take Chinese renminbi, yuan for that, and so they trade in dollars instead, because you feel like, well, okay, the dollar, backed by rule of law or all the other thing that people say. And they feel like that's a more stable of an exchange rate, stable currency than either the yuan or the ruble. If you can construct your own currency unit, trading unit, whatever, that has a more stable value, of which what it is, it's all these currencies and some gold, well then, okay, why not use this one? What do we need the dollars for? That gets back to that falling demand for dollars. So anyway, I think it's a long answer to your question. But it was a long question. It was. I think that setting up that infrastructure is just all part of this process of offering all those countries an alternative to the dollar.
And we've seen for years that the main players in the BRICS group, let's just look at Russia, China, India, they have been huge accumulators of physical gold and physical silver, right? And those accumulations, although there were some pressings, China decided not to buy any gold. Get out of here. Right. They actually, all these primetime players and the smaller players in that entity have been accumulating large quantities of gold, of silver, of natural resources. Is that a fair assessment?
Oh, absolutely. There's a couple of things going on there. When you and I buy physical gold or physical silver, we're taking our money that we have in savings, the excess that we have from all of our work, and whatever's left is in savings, and you put it in the bank. Those are your personal dollar reserves. And when you take your personal dollar reserves and you get out of dollars and you buy gold. Well, that's what these countries are primarily doing. They've accumulated dollar reserves through international trade of exports and the like, whether it's natural resources or products that they make. And you end up with these, these billions or trillions of dollars in your foreign exchange reserves, and you take some of that and you buy gold. It's the same thing. What some of these countries, though, are doing is they're looking over the horizon and they're seeing this. It's not necessarily a remonetization of gold, but it's a revalue. Like we said, there's a value. It's not necessarily tied to price, but there's some value in holding gold. And they're getting ahead of it. And so, yeah, you see this. Just look across the board. There are a couple sites on Twitter that monitor this every month, whether it's India or Turkey or Poland or Kazakhstan, or you could go down the list. All these countries are buying 2 metric tons here, 4 metric tons there, 8 metric tons this month. And they are, it's a process that's going to continue. It'll be the 3rd straight year this year of record central bank gold demand. That's all part of what is even forcing the New York, London pricing structure to admit that and allow price higher. So anyway, that's all this underlying stuff. But the most important thing, to me at least, for anybody listening to us, is to just understand that this is happening. Just don't go around with your head in the sand thinking that tomorrow is always going to be just like yesterday. No, because that's not how the world works. Just because this debt-based system is the only system you've ever known as an adult doesn't mean that that's the system that's always existed for the last several hundred years, okay?
Or that will continue to exist.
Or that will continue to exist. I mean, there's a lot of precedent for this shifting of this reserve currency status and fiat currencies being devalued, to nothingness. Dave, let me give an example to everybody that I like to use. Here, excuse me for a second. I'm going to reach over my shoulder. My wife gave me this.
Nice.
Years ago, right? Now, look, don't come to my house. It's a piggy bank, okay? I don't have this $1 million thing sitting on my desk, okay? It's nothing to it, okay? But people have seen these, right?
Yeah.
This is a gold bar. They weigh like 25 pounds, right? This is a big, heavy thing, but not this one. But
yeah, the real one, the real deal.
In this form,
yeah,
right?
The real deal.
Okay, this form is what's called a London Good Delivery bar for the trading of physical metal in London. It's 400 ounces. Well, now how pure it is and all that kind of stuff. Whole other story, but 400 ounces. So that 400 ounce bar, when Nixon closed the gold window in 1971, you could buy a bar for about $11,000. 25 years later, in the late 1990s, you could buy this gold bar for $110,000. Another 25 years later, we're talking gold at $2,700. Take that times 400. You can now buy this gold bar for $1.1 million. Dave, is this the same gold bar?
It sure is.
So what has changed?
The value of the currency.
Right. It took you 11,000 of your little greenbacks to buy one of these things 50 years ago. Now it takes 1.1 million of them. Gold is the same. This hasn't changed. It's the purchasing power of that dollar that has changed. And that, again, at the end of the day, all this other stuff notwithstanding, that's why you have to have some of your assets in physical gold and physical silver too.
And in fact, Craig, tell me if again I'm off, that gold bar that is worth 1.1 million today, roughly, if we actually were in a free and fair, non-manipulated market, I contend that bar is worth far more than 1.1 million.
Yeah, that's the challenge, Dave. What we're talking about here.
And I don't have a number, but I believe it's
right.
It's significantly more.
When we talk about $2,700 per ounce, right? It's a fraction. There's a denominator and a numerator, right? $2,700 per ounce. What we don't know is how many ounces are actually available, because this system that is currently used to determine a price is based upon primarily the trading of derivatives, futures contracts, forward contracts, things like that. How much actual gold there is, physical gold, not this, plastic thing that I just showed you. How much actual gold there is with clear title that you can actually hold in your own two hands, nobody knows. So if we don't know how many ounces there are, the denominator, then I have no idea what the actual price should be. And again, we don't want to, this is all part of the value. I'm not sure what the price is. I just know, it's like when you watch it go up and down every day. I'm not sure what the price is, but I know what the value is.
Right.
And I am very, very happy to continue to acquire it while I can.
So as we're recording this, Craig, last question. As we're recording this, the BRICS are having their meeting in Russia. They haven't come out with a final communique yet. But do you find it interesting, if not odd, that while this meeting was occurring, Monday, this week, we saw gold moving up Tuesday. Oh, wait, gold, silver, boom. And then all of a sudden, I was unaware of any huge amount of stores of gold or silver being uncovered, unearthed, whatever. Wednesday, boom, right? Gold gets hit, silver gets hit. Again, there was no press release of a huge amount of gold. But, and tell me if I'm off, to me that was a temper tantrum by the syndicate that has criminally manipulated the price downward with their paper vapor contracts, trying to send a message to the meeting in Russia. Hey, don't think like you can control this whole thing. We still have some firepower left.
I'm sure that's part of it. It's also a reflection of the folly of the pricing structure.
Yeah.
That you can trade literally each COMEX gold contract is alleged to represent the future delivery of 100 ounces, but nobody ever takes delivery. But you say it's 100 ounces. So then when you trade 100,000 contracts over the course of an hour,
right,
that's 10 million ounces.
But that happens, right? I mean, people say 100,000, that could never happen. Oh, no, Chris. No, Craig, that happens.
Right. But there's nobody taking 10 million ounces on a forklift of these babies and moving them around, and now you own them, and now you own them. No, it's just this phony baloney digital transaction. And it's just like, and it's really just a dot on a screen. It's not even recognized for being, gold or silver. The computers, the high-frequency trading, algorithmically programmed and driven trading machines that are responsible for 85% of New York Stock Exchange volume during U.S. hours are also responsible for a large part of that volume on the COMEX, the commodity exchange in New York, where these gold contracts are traded. And so the computers are programmed. They see interest rates rising on a certain day. Or they see the dollar index, which is where the dollar is compared to a basket of other, similarly devaluing and mostly worthless fiat. Maybe the dollar is perceived as stronger that day. And so these computers respond by selling gold. And that's how the price moves like that. I mean, it's nonsense. It's BS. It's garbage. It one day, too, will collapse under its own weight. But that's how you see these movements like that. Now, people will say, yeah, you only complain when it goes down. I suppose. But I understand the fraud behind the system. If there was in New York where this stuff is traded, these contracts, if there was actual physical delivery being made at that price discovered there, I'm doing this a lot today, Dave.
No, hey, better two fingers on each side than one. You could get away with one finger. Yeah, right. There it is.
If there was actual physical metal being traded and exchanged at that price, that's, okay, that'd be one thing, but there's not. There's no, the physical backing of those contracts is,
it's a shell game.
I don't want to say
it's a shell game. It's a shell game.
It's a shell game. And so you can use, it can be used in a number of ways, like what you said, to send a message to dissuade long-term ownership. Oh, look at the volatility, Dave. Oh my gosh, look how volatile that silver is. Why would you want to own any of that? So there's a lot of rationale behind the system set up the way it is. But whatever. Again, hey, if somebody even still today wants to sell you an ounce of silver for $34, okay, that's probably good. Or sell you an ounce of gold for $2,700. Take 2,000. Again, remember, this baby used to cost 11,000. Mm-hmm. Okay, even under the current system, it's going up tenfold every 25 years. So I don't know if I'll live to be 83.
Oh yeah, you're there.
The current system, it might take $11 million to own one of these babies by 2050. So, and what's that? It would be $27,000 an ounce, not $2,700. Okay, if you just even under this current system, extrapolate it forward, it's the same rate. And I think the rate's probably going to increase because of where we began this conversation, that debt-based spiral getting out of control.
And let's end our time together today, Craig, by, again, going back to the beginning of this conversation with El Arian talking about the fragmenting global system. Is it an overstatement to say one of the most effective, if not the most effective insurance policies you can have to protect your financial freedom and security is with physical gold and physical silver?
Oh, for sure. I mean, we have millennia of evidence, to suggest that that's your safe harbor, right? Your lifeboat in the storm. Again, now look, there are opportunity costs out there, right? I mean, I remember we could have this conversation in 2011 or 12. Oh man, Dave, I keep talking about the end of this great Keynesian experiment. The math is the math. It's just we've hung in there for another 12 years. And if I had taken every single penny I have and put it in gold, at $1,800 an ounce in 2011, I'd be now up 50% from that date. But, there's a lot of wandering in the desert. There's a lot of opportunity costs that I wasn't invested in other things over the past 12 years.
Right.
So no wise or prudent person would ever take every penny they've got and put it into anything. However, I think as a part of a reasonable, rational portfolio, there is a place for gold and silver. And I'll leave you one more thing, Dave. Again, even under this current system, we don't have to blow the whole thing up and have the COMEX exchange crash and all that stuff. Even under this current system, 96% of financial advisors, whether they're stockbrokers or they run hedge funds or whatever, a Bank of America research piece, 96% of financial advisors have less than 5% of their clients' assets in precious metal exposure. 71% don't even have 1%, Dave. Across the entire asset, the whole global investment community, the amount I've seen is anywhere from 0.5% up to 0.7 of 1%. Global assets dedicated to the precious metals. What if that goes to 2%, Dave? We've seen days when
it's a stampede.
And it gets back to the whole too many dollars chasing too few goods.
That's right. Of
inflation.
That's right.
Demand pull inflation. And so if all of a sudden, think of those days when the stock market, craps the bed and goes down 3% in a day, and they're like, oh, the Magnificent Seven lost $1.2 trillion of market cap. You can't even describe what $1.2 trillion moved into the precious metals would do.
No.
Because there's just no place to put it.
No.
There's only so many mining shares and ETFs and stuff that you can buy. So as the world wakes up to this, and like I said, that $380 billion in a month shook a lot of people by their lapels, and they start thinking, well, maybe we should put 5% of our portfolio into gold. You do that enough, pretty soon we're talking about some serious money, Dave.
I'll say. So
that's just another reason on top of everything else that it's, we've had a heck of a year, but we're not going back down to, $1,000 gold or something like that this time. It's just not happening.
Craig, educate our listeners in how they can sign up for your very valuable service at tfmetallsreport.com and how they can follow all your efforts on a daily basis.
Well, Dave, I appreciate it. And I know you and I have been friends for decade and a half, and I appreciate you being on the site and telling people about the site. It's just this tfmetalsreport.com. You go there, there's a button to subscribe. It'll give you all the details. It's only $15 a month. I should probably raise prices, Dave. It's been a while. But last time I raised prices was 2020. So everybody else's price has gone up, and I've been flat for 4 years. So I'm helping keep the CPI down, Dave.
You and me both, actually. I actually
you never have.
No, I kept my price at my price started at $9 a month in 2017.
There you go, Dave. Look at what we're doing to fight inflation. We're not gouging it. We're not the price gouging.
No, but we're bleeding, man. We're bleeding.
Yeah, we are. Yeah. But anyway,
it's true.
It's again,
it takes a lot of money to do this.
The $15 a month gives you access to all that we do there, but the community, like-minded folks that are all kind of helping each other from around the world. You can join for a month, and if you decide you hate it, somebody quit the other day and said I ranted and raved too much, and I thought,
yeah, I heard that. You know what? Here's the thing. You don't sanitize things. You are who you are, and I get the same blowback.
Yeah, you do.
And here's the common denominator. We care. And my response to that person for you would be this: if you want someone who doesn't give a crap, go somewhere else.
Passionate. Yeah.
I am who I am because I care about every person, not just on your site, my site, but every person in our country and around the world. And if I get riled up or you get riled up, you know what? Good. Because not enough people are getting riled up, Craig.
And Dave, you focus all your attention, a lot of it into politics. I focus all of my attention, a lot of it into the monetary stuff. And when that's all you do, you can't help but rant and rave sometimes because it's just so good.
When you see criminality and injustice, to be quiet about it, to be milquetoast about it, you know what? That is a reason not to subscribe.
Right? Like,
no, seriously.
Seriously. So if you, again, it's $15 a month. You can quit anytime. Right. I mean, if you think I rant and rave too much after a month, just quit. But I think our track record of doing this as long as we have, Dave, you and I, proves that there must be something to what we do. There must be some value to it. So I encourage everybody to check us out. Just tfmetalsreport.com right there.
I thank you, Craig Hemke, for everything you have done, are doing, and will do. I thank you, folks, for joining us. Until next time, Dave Janda signing off. Dream big and dare to fail, and yell a little every once in a while. It'll do your blood pressure some good and actually show folks you care. Until next time, Dave Janda signing off. Thanks for joining us today.